All right, welcome in everyone learners. Ready for another deep dive? Today we're tackling the Schwab U.S. Dividend Equity ETF. You know it, by the ticker SCHD. It's been making some noise lately, and I bet many of you have it on your radar.
Definitely a popular one, and for good reason. Those juicy dividend payouts, that laser focus on quality companies. But what's the secret sauce? How do they pick those companies? What's been shaking up its portfolio lately? And most importantly, what's it all mean for your investments? That's what we're diving into today.
You got it. We're going to unpack all of that step by step. First, we'll break down SCHD's stock selection criteria, then look at the big changes that happened in its latest refresh, and finally see how those changes could shape its future and what it means for your portfolio. Get ready for those aha moments, learners. We're serving them up without the jargon overload.
Love it. So let's kick things off with the basics. How does SCHD actually build its portfolio? What are they looking for in a stock?
Okay, imagine you're a company hoping to get into SCHD's exclusive club, the first hurdle. You got to show them a history of consistent dividend payments. And I'm talking at least 10 years straight, no interruptions. It's a powerful signal, right? It tells you they're serious about finding companies committed to rewarding shareholders over the long haul.
Absolutely, they're not messing around. So 10 years of steady dividends, that's the first filter. What comes next?
Next, they take all those dividend-paying companies and focus on the top 50% based on their current dividend yield. So they're making sure they're picking companies that are currently offering those attractive payouts, keeping those dividends flowing for investors.
Makes sense. But it can't just be about past dividends and current yield, right? Surely they're looking at the bigger picture too.
Oh, absolutely. They're not just chasing yield blindly. SCHD also places a huge emphasis on quality and the financial strength of the companies they consider. They're specifically looking for what they call high-performing or better solid companies. So they're doing their due diligence, digging into the fundamentals to make sure those companies are built to last.
So it's a blend of present and future, past performance and future potential. What other factors play into their selection process?
Well, aside from the dividend history, the current yield, and the overall quality, they also look at things like future earnings growth. They want companies that have the potential to keep growing and increasing those dividends over time.
Smart move. And what about liquidity? How easily a stock can be bought and sold?
Yeah, that's another key factor. High liquidity is important because it means investors can get in and out of positions smoothly without major price swings. And of course, recent price action also plays a role in their evaluation.
It's like a multifaceted selection process. They're not leaving any stone unturned.
Exactly. So it's all about finding that sweet spot between proven dividend reliability, current attractiveness, and the potential for future growth and stability.
Sounds like they've got a pretty solid system in place. All right, let's shift gears and talk about that recent shakeup in SCHD's portfolio. They went through their annual reconstitution, right? Tell us about that.
Right, it happened around March 21st of this year. Basically, it's like a spring cleaning for their holdings. They reevaluate everything, make some strategic additions and removals to ensure the ETF is still aligned with its objectives.
Kind of like a portfolio refresh, getting rid of the clutter and bringing in some new energy.
Exactly. And in 2025, they made some pretty significant moves. We saw 20 new companies added to the mix and 17 that got the boot.
20 additions, wow. Any standouts there?
Oh, definitely. Some of the notable additions that are expected to have a big impact on the fund include CocoaPhillips. In fact, it actually became the largest holding in SCHD after the reconstitution.
CocoaPhillips, interesting. Any other big names that joined the party?
Yeah, we also saw Merck & Co., Schlumberger, Target, and General Mills enter the SCHD club, all solid companies with a strong track record.
Big names indeed. So some fresh blood in the mix. Now, what about the companies that got removed? Any surprises there?
Well, a couple of big names said goodbye, including Pfizer, which had been a major holding at over 4% of the fund, and BlackRock, also a significant holding, got dropped as well.
Pfizer and BlackRock, wow, those are pretty big players. What other companies got removed?
U.S. Bancorp, Dick's Sporting Goods, H&R Block, and Legg were also shown the door.
Interesting. It seems like quite a few companies in the financial sector got removed.
You're right. And the interesting thing is, some sources suggest that these removals might not have been solely because those companies were performing poorly.
So there's more to the story. What are the sources saying?
It seems that SCHD may have been actively managing its exposure to the financial sector. Perhaps they felt it was becoming a bit too concentrated in that area. So these removals could be a sign of them taking a proactive approach to maintain balance across different sectors.
Makes sense. They're not just reacting to individual company performance, but thinking about the bigger picture and the overall diversification of the ETF. All right, so we've got companies coming and going. What does that mean for the overall sector breakdown in SCHD?
Well, those changes led to some pretty significant shifts in sector exposure. For example, after the Reconstitution, SCHD's energy sector allocation jumped up by about 8%. That means they're now holding a bigger chunk of companies in the energy space.
An 8% jump in energy, that's notable. What about other sectors? Any big movers there?
Yeah, the financial sector saw a pretty significant decrease, down by around 9%. So they've definitely rebalanced things a bit.
Big shifts indeed. Now, for our listeners, why should they care about these sector changes? What's the takeaway for them?
It's all about understanding how these changes might impact the ETF's overall performance and risk profile. Increased exposure to energy could be a good thing in certain economic environments, especially if we see rising oil and gas prices. But of course, it also comes with its own set of risks. Similarly, a reduced weighting in financials has its own implications depending on broader economic trends and interest rate movements.
Exactly. It's all about understanding the nuances and the potential ripple effects. So, sector exposure, check. Now, what about the dividends? Everyone loves a good dividend, and that's what SCHD is known for, right? What's the story there after the Reconstitution?
Well, one of the main goals of the annual reconstitution is often to give the dividend yield a boost. By swapping out some lower-yielding stocks for higher-yielding ones, they aim to generate more income for investors.
Smart move. So what are we looking at in terms of yield after this latest reshuffle?
Well, analysts are projecting that SCHD's dividend yield could climb to over 4% after the 2025 reconstitution. In fact, one source specifically estimated a yield of around 3.81% based on current prices.
4%, not bad at all. So potentially more passive income for SCHD investors. That's something to be excited about. Now let's talk performance. How has SCHD been doing lately, and what's the outlook going forward?
So while SCHD had lagged behind some of those high-flying growth ETFs in the recent past, it made a pretty impressive comeback in early 2025. In fact, it actually outperformed several categories, including growth stocks and even the broader market as a whole.
A comeback story. I like it. What are the experts saying about SCHD's potential going forward?
Well, the general sentiment from the sources we've seen is that value stocks, which make up a large portion of SCHD's holdings, are in a pretty strong position right now.
Value stocks, the underdog story. Why are they feeling so optimistic about them?
It seems there's a growing belief that value stocks could continue to outperform in 2025. Plus, some analysts have even issued price targets for SCHD that suggest a significant upside potential for the ETF's price this year. So if you factor in that potential price appreciation on top of the dividend income, SCHD could be looking at some pretty attractive total returns.
Attractive indeed. So for our learners out there, let's bring it all together. We've talked about SCHD's selection process, the recent changes in its holdings, the impact on sectors and dividends, and even its performance outlook. What's the bottom line here? Where does SCHD fit into an investor's portfolio?
Well, when you consider its focus on consistent dividend payments, its emphasis on high-quality and financially healthy companies, and its potential for both income and price appreciation, it's safe to say that SCHD could be a valuable addition to a well-diversified portfolio.
I agree. That focus on quality and value, combined with its relatively low expense ratio, makes it a pretty compelling option for investors seeking long-term growth and a steady stream of income.
And just a reminder, learners, this whole discussion has been purely for educational purposes. It's about giving you the knowledge and insights you need to understand this ETF and the recent changes it's gone through so you can make informed decisions about your investments.
Always empowering our listeners. Knowledge is power, right?
Absolutely. So there you have it, folks. That's our deep dive into SCHD. Hopefully you've gained some valuable insights and those aha moments we promised. We've covered a lot of ground today, from stock selection to reconstitution, sector shifts, dividend potential, and even performance expectations. We hope you're feeling more confident about understanding this ETF and its place in the investing world.
And remember, staying informed about your investments is key to making smart decisions. That's why we do these deep dives.
Exactly. And hey, if you enjoyed this episode, be sure to subscribe so you don't miss out on our future deep dives into the world of investing. We've got a lot more exciting topics lined up for you.
We're just getting started, learners. Keep those questions coming. Let us know what other investment topics you'd like us to explore.
That's right, we're always listening. Until next time, happy investing, everyone.
Happy investing.